This video is going to show how to use our new build your own trend currency meter. This was released in mid-April 2012, and when you right click on the chart here, you will see the FX build a trend histogram, which I have now made work on the synthetic individual currencies. And these are the sample weights, which you can change. You can adjust this to be super fast or slower depending on your time frame. If you like to hold trades for 3 to 5 hours, you might want less fast settings and use slower settings. But this is what I use and I love. Underneath that, I have the pivot score daily, weekly, monthly. And as you can see here, I'm now using this on the 6 pip range bars. So what's better about the new currency meter compared to the old one is that if the market's moving a lot, up or down, there's a lot of bars, and so you have a lot more granularity when the market's moving. And when the market's not moving, there are fewer bars because it has to move 6 pips for a new bar to form, and you get to see the value of it at the end of that bar. Typically, range charts tend to close at the high or low of their bar, and so you tend to see the peaks or, the extreme strength or extreme weakness on these bars. So clearly, if you can see here today, the pound, very, very strong, pegged at 100. The daily trend's up, the weekly trend's up, the monthly trend's up. You want to trade that against the weakest ones, and between the dollar and the yen was weaker, the daily trend's down, the weekly trend's down. 430, you're looking to buy the strong pound yen. It's actually even before 430. Let's go back there and find the exact time. Well, actually, 4 o'clock right here. Let's look at this earlier. This was 341, and then 425. It starts getting extremely weak. So, pound yen, you're looking to buy. You can see this one from around 129.30 went up 110 pips. Even if you missed the first wave, even if you missed this little tiny move right here, if you bought this breakout way over here at 426, which you had almost 30 minutes to be prepared to get into this trade. You buy this right here around 70, and you get out at the trailing stop up here at 30, you made 60 pips. And look at how intuitive that is. Extreme strength and very little weakness on very few bars. That strength's very likely to continue, and it does. You can see the New Zealand was also weak, so you can buy the strong pound versus the New Zealand. Coming up to 630. If you miss this first move right here, nice little rectangle pattern right here. This is one of our methods. We like to buy pullbacks and sideways 30-minute to 2-hour plus time-based rectangle breakouts. And you can see this one up. And even if you bought it when it went over the high right here, 9.512. And even if you got out of it right here, you can see it went up 30 pips. And then it went up another 40. You got a pullback, went up, pullback, went up. That's the beauty of the new currency meter, which I think is at least 30 to 40% better than the older one. And it tends to give reversals much quicker. The Swiss also was weak, so you can, today buy the pound Swiss. And you can see, I have this on here from class, but if you missed the first wave up, you had plenty of time to get into this. And it shot up from 46.30 all the way up to 47.10. That's 80 pips worth of move. Most of us would have got out here when it went sideways, or even if you got out way too soon right here at 52. In this trade at almost 22, you made 30 pips. Now, what about earlier today with the euro? It's weak. The daily trend's down, the weekly trend's down, the monthly trend's down. The dollar is stronger between it and the yen because the yen has a daily and weekly trend that's down, and the dollar's daily trend shifted up. You want to therefore sell the euro dollar today, at least until about 6:30. And you can see it's underneath the hourly. You're looking for sells, sells, sells. Each of these moves is 15 to 25 pips. You have a nice little pullback right here. It went back above the previous day's low. When it starts to come back down, you go short. Let's just say here at 88. You got out at the trailing stop down here at 60. Let's just round down 1 pip. Went down 20 pips. You can also see the Swiss extremely weak, and notice the peaks of weakness and almost no strength. Very high odds of that weakness continuing because the daily trend's down, the weekly and monthly's down. So therefore you want to buy the strong dollar versus a weak Swiss. Let's take a look at this. And you can see, up, you buy this pullback, maybe you might have lost 5 pips here. You buy the breakout again right here at 75, you use our trailing stop, you're out at 96, you got your 20 pips. Or if you're just a quick scalper and this is a 10-day moving average, it's a weekly pivot, it's a support area, it came down to that with almost no weakness. I probably would have bought it right here at 72 versus 75 just so I can have a tighter stop. And then when it shoots up, maybe you're out of here at 90, right? So you made a quick 15 pips in less than 20 minutes. The New Zealand, weak all day long, and obviously the pound was extremely strong, but at 6:30, what if you wanted to trade that against the dollar? Well, you sell the New Zealand versus the dollar. Look, this one's underneath the hourly, it's coming down, you can see extreme weakness, the daily trend's down, the weekly trend's down, monthly trend is just slightly up, breaks down underneath the lows right here. Anytime you see it come down, hit a low, come up, come down, hit that low again, usually double bottoms are the end of moves. If you don't get a bounce off a double bottom, usually it's going to break down lower. So you might be short right here when it starts to go down, 81.91. Put your stop right above this 10-day moving average right here. A very key support area. Once broken, tends to become resistance. So it's not likely to go above there if the trade's going to work. You're risking less than 10 pips. Short, let's just say at 90. And even if you got out of it right here, went down 13 pips in 20 minutes. So this is how you use our new currency meter. And since this video is going to be watched by a lot of people who want to learn how to use our newest tools, also keep in mind I put in the pivot levels with a new option that draws them over here on the left-hand side. If you want to reduce some of the clutter on the right side of the chart, this is what I and most of you look at the majority of the time. You can take a quick glance over here to see where the daily pivots are. These are very good support resistance areas, and then especially the white pivot. Above the pivot, it's more likely to go up. Once that gets broken, that adds to the probability of it going down.